But at the end of the day, we are the world's reserve currency. And as bad as it is here, most of the world is following us, stupidly, but they're following us. And, we're printing money irresponsibly. We're doing all these different things. But here's what I know to be true. There are two assets that will absolutely inflation-proof your life, position you to be able to take advantage of opportunity in any economic environment. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and this video I want to talk to you about the fact that inflation is coming and ultimately what you need to do to inflation-proof your finances as we are going here. Now, here's the reality. Inflation is just part of our economy. It is what it is. Before I get started with this, what I want to do is first and foremost pop over here, give you what the definition of inflation is. If you type inflation definition into Google, here's what it says. It says it's a general increase in prices and the fall in purchasing value of money. So what does that mean? That simply means that inflation is the devaluation of your money. So everybody knows that to be true. Everybody understands that, if you had a $100,000 income in 1980, that $100,000 income, if you never got a raise, would not buy you nearly as much in 2021 as it did back then, right? So that is inflation. It's the erosion of your purchasing power. So that means if you have a $100,000 income today, 5 years from now, if you are not getting a raise, heck, next year, look at what we have for inflation right now. We're at about 5.2%. I'm gonna get into that in a second. But if you have a $100,000 income this year, and next year you don't get a raise to $106,000, $108,000, you're actually gonna have to take a reduction in your standard of living because that $100,000 is not going to be able to buy you as much as it did this year because the cost of goods, the cost of energy, the cost of fuel, the cost of electricity, the cost of going to the store and buying food, your plane tickets, your travel, all that stuff is getting more expensive. And so we need to take that into consideration. Now, here's the other thing that impacts inflation. The government is printing money like it is just like it's its job, quite frankly. I don't know what it is about our government, but they feel like it's their job to print money. Actually, while I'm doing this, what I'm gonna do is I'm gonna go to my computer here really quick. Watch this, and I'm gonna go to the debt clock because this is just kind of fun. And so what I wanna do here is I wanna share this screen and kind of go through the national debt clock. Now, if you're not aware of it, the United States government almost had a government shutdown on October 15th. And what's happening right now is they actually just voted to increase the debt limit. So meaning we're just gonna print another, $500 billion just to keep the debt, just to keep the government open. And I don't know, like these politicians have no no accountability ultimately to what they're doing. So they just print all this money. We're 28 trillion, almost $29 trillion in debt right now. By the end of the year, it wouldn't surprise me if we're 30 trillion in debt. The speed in which we are going up in debt. Look at these numbers growing. I mean, that's $100,000, $200,000, $300,000. We literally are going up in debt $300,000 in the last 10 seconds, right? As a country. That's absolutely disgusting, right? But it's happening, it's real. These numbers, if you've never gone to usdebtclock.org, I would go check it out. And this goes to show you that inflation is real. And I'm a big believer that the government actually doesn't mind inflation being so bad because what they're doing is they're inflating our debt to be less of an issue, right? And that's where, countries like Zimbabwe, and I'm not saying we're going the direction of Zimbabwe or anything like that, but that's where, people are become concerned about hyperinflation in that scenario. So, but here's the deal. As they print this money, think about what's going on in the world. What are the economic policies that are going on? They're printing money. Credit is cheap, right? So when credit is cheap, what happens is they're able to, drive the prices of houses up because, your house, I've done videos on this, your house is not worth, $500,000. Your house is worth what you can afford to make your monthly mortgage payment on, right? So if you were to go and have a $500,000 mortgage and let's just say that's after your down payment or whatever, you had a $500,000 mortgage, that mortgage at let's say 5%, for instance, which I remember when I bought my first house in 2004, we got a 6% fixed mortgage rate. And by the way, people would lock that in. Mortgage rates may never get lower. That is the best thing of all time. Now they're 2 point something, right? And so that just goes to show as they lower interest rates, what happens is that $500,000 house, well, $500,000 buys you more because that mortgage at a lower rate, the amount of cash, the amount of monthly payment that you have to pay is greatly reduced, right? So now you don't qualify for a $500,000 mortgage, you qualify for a $3,000 monthly payment. So now all of a sudden that $3,000 monthly payment doesn't buy you a $500,000 mortgage, that buys you a $650,000 mortgage, right? And so now what does that do? That increases the real estate market by that 150 grand. That's a 30% increase in the real estate market. And at the end of the day, all of this has to get reined in. It has to come under control. We got to stop printing money if we want to retain our world's reserve currency status. We have to, have better economic policy. We can't have cheap money, because what that does is it encourages too much risk and people are losing money, taking the wrong risk at the wrong time. They're overexposed. It disincentivizes actual good economic behavior and savings. And all that is crazy. The reality is inflation right now, and I'm going to do a separate video on this, so make sure you subscribe to the channel, and that way you hit that bell, that way you get notified when I make this video, because it's going to be probably the next video I film, and I might do it right after this one, as I'm just sitting here and kind of in this stuff and just kind of on fire with it. But the bottom line is, you look around right now and you look at the cost of energy, gas and oil, and we're coming up to winter right now, and all the states in America, in the Midwest, in the Northeast, where I'm from, Vermont originally, I know that heating oil in the wintertime is a huge deal. When it gets to 0 degrees, 32 degrees and below, and you got to spend money on heating oil right now, I just looked at it, 42% inflation year over year for heating oil. Now, that's not a big deal in the summertime, but when it comes to the wintertime coming in, and people are going to realize those costs, it's going to be crazy. It's going to be crazy. That doesn't have to do with anything with any of the supply chain issues that might be happening because of COVID and all that stuff. When the demand gets driven up for it, if they don't have the supply, that could drive it even higher. So I'm a bit concerned about that. Now, what I want to do really quickly, and I'm not going to go into a lot of detail with this, but I want to show you a little bit about the history of inflation, and talk about how it impacts your investments. So now you can see I got this prepared already. The inflation in 1980 through 1989. So I just wanted to focus on the 80s. The average rate of inflation was 5.55%. Now, that makes what's going on right now seem like not that big a deal. But I want you to understand why it is a big deal. Because in the 80s, everybody talks about the fact that, wow, we had the booming 80s. It was amazing. The stock market did really well. Investments did really well, all that stuff. Well, guess what? In the 80s, if the market averaged 12% and the inflation rate was 5.55%, that means you go 12 minus 5.55. That means the real return, if that were the scenario, I'm not saying it is 12, I go run the numbers, I'm not even 100% sure what they are, but just the principle would be that the rate of return would be 12 minus 5.55 from a purchasing power perspective. Then when you add in managed money fees and commissions, all that stuff on your investments, it gets way worse than that. So and this comes to the point that I try to tell people, the amount of money that you have doesn't matter. What that money can buy you and the cash flow it provides you is what matters more than absolutely anything out there, right? So here's what I want to do. All this is good. I'm not trying to scare you. I don't want to be the guy that's like Mr. Hypey talking about, inflation and how, we're going off this inflationary cliff and we're going to have hyperinflation and you should be super scared and we're going to lose the world's, reserve currency and all these different things. Is that all a possibility? Sure, it is. But at the end of the day, we are the world's reserve currency. And as bad as it is here, most of the world is following us stupidly, but they're following us. And, we're printing money irresponsibly. We're doing all these different things. But here's what I know to be true. There are two assets that will absolutely inflation-proof your life, position you to be able to take advantage of opportunity in any economic environment. And so I want to spend the next couple of minutes just kind of going through what these are to give you a little focus, a little hope, and let you realize, no matter what's going on, I know a lot of people are out there saving into qualified accounts, saving into IRAs, saving into brokerage accounts. And you have to look at that. Right now, this year, your account could go up 7 or 8%, but if inflation is 6%, what did you really earn? Nothing. Nothing. And that's the thing you need to be concerned about, is not how much money do you have, but how much that money can actually buy you and the quality of life that it will give you. And so there are two things And you can start this at any point in time, at almost any age, for both of them. But I'm going to go through and I'm going to tell you what they both are, and then I'm going to back it out and we're going to go from there. So those two assets, and when you combine them, it puts you in a position to thrive. Like, that's the most important part, right? Like, when you combine these assets, it's amazing. And those two assets are whole life insurance. And I'm not just talking about a regular whole life policy. I'm talking about an investment grade designed whole life insurance policy that's designed to give you a lot of liquidity, and I'll get into it, and access to your capital and guaranteed growth. And I'll get into why. And then the other asset is actually real estate. Now, real estate is amazing because, you know, if you buy cash flow real estate, when inflation goes up, because of cheap money, your house appreciates. When inflation goes up, if you're using it for cash flow, you can build inflationary protection. You can build cost of living adjustments, or build the rental increases in your lease, right? So you can say it's going to go up 3%, it's going to go 5%. Your rental price is going to go up as a percentage of CPI. So if you had a $1,000 property that you were renting for $1,000 this year, and you had in the lease saying, we're going to increase your rent next year at the percentage of CPI, and CPI went up 6%, that means you raise your rent by $600, right? And that is built in contractually. So once again, it's all about cash flow. So you get the appreciation, you get the cash flow, you get the tax benefits. That's why I love real estate. I'm not going to get into that more for now, because I know a lot of people are not going to be in a position where they can just go out and buy a rental property right now. If you are, give me a call. I would love to connect you with some people. It's amazing. I absolutely 100% encourage everybody that can, even though the real estate market, a lot of people think it's overblown right now. A lot of people said that in 2008. But I'll say this, if you buy right, it's not about what the value of the house is. It will appreciate long term, but it's a matter of, will that house cash flow? And if you could buy it right and it can cash flow, even if it goes down in value, as long as it's providing a positive cash flow, doesn't matter, because it's the cash flow that matters. And typically in a recession, foreclosures go up. And so what happens is lots of people flood the rental markets. And so that keeps rental prices high, even though housing prices come down. And so it opens up a lot of opportunity. We'll do more videos on that. I got Mike Wolf coming on. We're going to create a lot of content on that. And he's just a real estate expert who's been doing this for 32 years. And I know he'll bring a ton of value. What I want to talk about now is utilizing whole life insurance as a savings vehicle to inflation-proof your life. Now, I think it's important to understand what I just said. Whole life insurance is not an investment. I want to make that abundantly clear. There are too many yahoos on the internet right now that are trying to sell index universal life, whole life, or whatever as an investment alternative. And I'm going to tell you right now, if anybody tries to sell you on buying any kind of life insurance product as an investment, I would say run as fast in the other direction as you possibly can.
Why are you running? Why are you running?
But what I will tell you is that whole life insurance, when properly structured, not index universal life, absolutely not index universal life, but whole life insurance as a savings alternative is one of the best things you can do. And the reason is because you have to understand kind of the inner workings, the foundational understanding of what whole life insurance is. Remember, whole life insurance companies have been doing this since the late 1840s, mid 1840s, right? So that's before, when you go with the big mutual companies, you're talking about, they've withstood the test of time through the Civil War, many bubble burstings in the economy, the Great Depression, the Korean War, World War I, World War II, Vietnam, the dot-com bubble, the Great Recession in 2009. In all that time, only one major mutual company has ever failed. And I don't know if you know this or not, but in 2009, during the Great Recession, over 570 banks failed, right? So, and that's just 1 year, right? Think about that. In 170 years, one major mutual life insurance company has failed. And in 1 year, 570 banks failed. So that's why I love this strategy so much. Because when you buy a whole life insurance policy with a mutually held life insurance company, what happens is you are ultimately a shareholder with that company. The policyholders are the shareholders. And so therefore, the profit that's derived from the investments in the whole life insurance company get paid as dividends to the policy holders. That's where when they say there's dividends inside of a whole life policy, that's why they do it, right? And so that's important to understand. And so what happens is how those dividends are created is why your policy is going to be inflation proofed, right? Because it's on life insurance companies, think about it. You don't last 170 years without being masters of managing risk, right? And they do that by focusing on guaranteed fixed investments. And so one of the biggest things in doing that is when inflation happens, the guaranteed investment market, the fixed market, goes up in price, right? So if inflation starts to get out of control, what's going to happen is these life insurance companies are going to see an opportunity, and they're going to go, instead of buying a 10-year treasury note right now at 2%, they're going to go buy a 10-year treasury note at whatever rate of that note goes up, and the bonds, the T-notes, typically will follow the inflationary trajectory, right? And so what's going to happen is those go up, and so as those fixed rates go up, the dividend rates in your savings plan for your whole life policy will actually go up as well. But the beautiful part is right now, Section 7702 in the IRS code has made it so life insurance companies are able to reduce their guarantees because of all the pressures that are going that are happening to these insurance companies. They're allowing them to reduce their guarantees. I know there are several companies right now that are giving people until March of next year to lock in the 4% guarantee that is in their current contracts. And when you lock that in, you guarantee that that policy will have a guaranteed 4% growth plus whatever dividend that you get. And even if you don't hit that window, you're still gonna have a guaranteed 2% plus whatever dividend above and beyond that. And the dividend is not guaranteed. But to be able to lock in a 4% guarantee, think about it from a savings perspective. That's a 40x rate of return compared to a traditional savings policy, savings plan, savings account, I should say. It's not a savings policy, savings account. And then as the inflationary pressure keeps going up, the dividend rates in whole life policies will continue to go up, so that will build in protection. On the last note, it really to kind of land the plane here to help you understand why this is so important. I'm a big believer that the biggest mistake that people make is they invest too soon. And what I mean by that is if you go out and you invest and you take all this risk and you don't have a financial foundation of your life built on safety and liquidity and control of that money and guarantees with that money to make sure that, if the market takes an economic dive, and you lose your job or, something happens, that you need to make sure that you can weather that storm and that you can not just weather that storm, but be prepared for opportunity, because 2009 is the time when the most people became millionaires, period. It was the year that we created more millionaires in this country than ever before. Well, it was also coming right out of one of the greatest market crashes that we've had in the past 100 years, right? And so those environments create opportunity or they create pain. And so what I'm telling you to do right now is position yourself to protect yourself against inflation, but in the process, you're also stacking cash and stashing cash away, preparing for the opportunity that you can thrive in the next market downturn. And you could do that through buying real estate assets that have been depressed in value. And I've got a whole bunch of videos on this topic, and I'm gonna be doing a lot more. So once again, make sure you subscribe, make sure you hit that bell, that way you get notified every single time I launch a video. And ultimately, this is the most important part. If you figure out and you say, okay, I know that I need to protect myself from inflation, what assets out there are gonna help me do that long term? I can tell you the only one that's gonna do it on a guaranteed basis is whole life insurance. It's the only one out there that will do it, that will give you inflation protection without losing liquidity of your money. That's the biggest thing. You don't want to put your money in a place where you are inflation protected, but then lose control of that asset, right? Because if you lose control of your capital, then you can't take advantage of opportunity in market downturns. So that's why I love whole life insurance. That's why I call it not an investment alternative. It's a savings alternative, because you're just sitting there like a savings account, just kind of a savings account on steroids. And then when the market turns the other direction, which it always will do, and it will always bounce up, you want to be opportunistic and you want to buy at the right time so you can access the capital in your whole life policy, get the right assets. I'm a big believer you got to take risk if you want to get where you want to go, but the risk is not to be taken inside of the policy. It's to be taken in real estate, in business. Heck, I know people that are buying Turo vehicles to rent on Turo, Airbnbs, all sorts of different, fixing and flipping cars, buying and fixing and flipping houses, doing all these different things. That's what's going on. But if you have a savings account that you can kind of create your own banking infrastructure, that's what it's all about. And if you want to learn more about that, all you have to do is go down in the link below. There's a link down in there for a clarity call with one of our team members. It's amazing. No cost, free of charge. Go down, check it out, have a conversation with somebody. They'd be happy to kind of guide you through, have a conversation with you about what's going on in the world, what's going on in the economy, what's inflation look like, taking a look at your plan, your numbers, what you have going on, and guiding you and giving you clarity on what might be the best path of action for you. So anyway, I hope that helps. If you did find value in that, please smash that like button. YouTube algorithm loves it. It'll get this out to more people. I think inflation is a real concern right now. I think people's financial strategies around inflation is probably one of the most important topics going on in the world right now that people need to understand. Otherwise, it will be detrimental in their life. So once again, be honored if you subscribe and hit that bell. I'd love to have you as part of the community of Cash Flow Hackers, where we're teaching people how to get out of the mindset of saving for this period of time, 40 years, 30 years down the road, where we don't even understand what the economic environment, the economy, political landscape, all those things is going to look like. You can't be successful if you don't understand the variables you're trying to plan with. The reality is, 40 years ago, we would never have guessed we would be where we are now. So how do we expect to understand where we're going to be in 40 years? Let's come up with a plan where we can create cash flow, invest for cash flow in an environment that we can understand and in a way we can control. And that's what this channel is all about. So if you want to join, subscribe. I'd be honored to have you here. Please, if you have any comments, engage below. And I look forward to talking to you soon. Have a blessed, inspirational day. See you on the next video. Take care.